Good morning, trading world. It is February 10th, 2022, 7:39 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the SPY. We come into the trading day with all eyes on the CPI and Jobless claims today. Happens at 8:30 a.m. So I do expect a lot of fireworks before market open. Will it stop the rally in its tracks or push us through the overhead supply resistance? Another thing to pay close attention to is that the 10-year rate is at 19.29. That's 1.9% basically. And it got up to 1.97% during trading yesterday. The 2% rate will be a trigger for the market and not a good one. So again, I'm going to stress that the CPI and Jobless claims report is basically going to rule today. It is going to have a lot to do with the direction for today and tomorrow. Now, let's go ahead and get into the key levels for today. All right, here we are with the key levels of today, starting on the resistance side with the jack resistance of 457 to 458. The queen resistance would be the 459 to 460 area, and the king resistance is going to be the 463 to 466 area. On the support side, we have jack support at 455 to 453 area, and the queen support at the 452 to 451 area, and king support at 448 to 445 area. The main thesis for today is bearish, closing below 457.54 with a projected high possible short entry of 458 to 460 with a low or target of the day of 451 to the 450 area. The alternate thesis is bullish, closing above the 457.54 area with a projected high of 459 to 460. Also keep in mind that if there is a complete break of the 459 to 460 area, there could be a lot of pressure that could cause a massive short squeeze, which could thereby explode us up even more and deeper into the 460s. The current minor channel we're in is 463 through 453, with the major channel being 471 through 453. Again, be aware of the springboard diver type situation or setup, and that's where we explode higher for a day, then nosedive in the next day or so. Also, again, I want to reiterate on the 4-hour chart, the data sets that I track, it is all bullish. And because it is all bullish, we must be on high alert for a drop. And the drop will be based on the 4-hour chart. And levels that I perceive off of that 4-hour chart. So again, stay on guard because of this. Now also, because of the reports happening before market, we should see a lot of fireworks, so a lot of action will take place before the market. And it's probably going to leave the rest of the day trying to catch up to what happened before market. So I want you to be aware and be careful of that scenario. And I'm going to try to base or include a lot of that action in today's scenarios. And let's bring up the first scenario. All right, the first scenario is what I like to call an expansive range day type structure. We could look to set a decision area low boundary around the jack support area, and this will probably all take place before the opening. And with us taking that position or falling down to that jack support before opening, there's going to be a lot of catch up after the opening. And that's going to put us in a situation where once we find that support, we could chop higher back toward the jack or queen resistance before falling again or chopping lower, and then at some point giving another half-hearted rally to try to get back toward that jack or queen resistance area. Also, I preach this a lot, especially on range days. There are so many different variations, so we have to be prepared for if said news reports, even though I'm leaning to the bearish side, but there is a case where we could have an explosive move up before the opening, and that explosive move up will take us toward either the jack or queen resistance area before falling or chopping lower, and then we would see maybe to an expanding range or pushing boundaries toward the upside. It's possible to see a scenario like that play out. Key thing with the range day, the most important thing that I look for is divergence. But on the range day, convergence is your friend. So when you see stiff turns in your indicator, look for price action to flow with those turns. So I call support and resistance decision areas because no matter what happens, these are the areas where you have to make those decisions. You don't want to enter in the middle of nowhere and get chopped up. So we try to always make entries and exits at decision areas where we have something to put our back against as a stop. So that's the important part about trading, period. You always want to have a place or an entry where there's a prominent level that you can lean on to say, okay, if whatever happens and we break that level, that's my key to know that this is not going the way I plan and it's time to exit the position. And we can exit for a small loss and then regather yourself and figure out what's going on from there. But we don't sit in and absorb huge losses and let things go against us and drain our account. That is a no-no if you want to be a consistent trader. So that's the first scenario, range day structure. Let's get to the second scenario. Scenario number 2 is going to be our rounded reversal day type structure. we could get a continued fall off toward the queen or king support area. Emphasis on the queen. Should be support area today. And find midday chop around either the queen or king support area before spending the same amount of energy we use coming down to go back up the second half of the day. Because today is a big report today, we have to always be aware of the vice versa scenario. So things could pretty much take off this way, and this could be how things play out on the vice versa when it comes to the rounded reversal day type structure. So we have to be aware of that because so much hinges on the reports this morning that it is hard to read what exactly could take place. It's basically a surprise waiting to jump out at us. So in doing so, we have to be prepared for a lot more things on mornings like these with reports that loom this large over the market. So that's scenario number 2, the rounded reversal day type structure. And in all of these, always pay attention to the previous close. I have it marked here as the blue line here, but it plays a big part in identifying each day structure, because with rounded reversal and trend days, this is going to be a key support or resistance in helping you identify those days early. The key takeaway from the range day is that this may not be, or more than likely won't be, respected as a support and resistance. It will be broken usually earlier in the day if we're having a range day. So that's scenario number 2. Let's get to the last scenario. Alright, our last scenario is going to be the trend day down day type structure. We open gap down at the start, coming into the opening. Because we open gap down, we start with a small or half-hearted rally trying to get us back to the previous close of 457.54. Somewhere between wherever we are and at 457.54, we find resistance. And once we find resistance, that reverses us over into the trend or the main trend of the morning, which would be down. That downtrend is going to take us to either our queen or more than likely the queen, but possibly the king support area, which is where we'll probably find our midday chop zone. And from there, the second half of the day on trend days aren't very important, or aren't. We usually get a head fake, and then if it's a downtrend day, we could usually see a little bit of a small half-hearted rally going into the close. Again, because this is a report day, we have to be aware of the vice versa scenario. And the vice versa scenario could be a trend day up. And with that, we would look for something like this taking place. Going up, finding our midday chop, head fake, and then a slight fade going into the close. But again, because this is a report day, we have to be aware of the vice versa scenario, because No one knows what the reports hold and how markets will react to these reports. And then I would like to make the case that even if you did right now, even if you did know the numbers, there is still no handicap in what way the market is going to react. Because you could know the numbers right now, and the perceived price action that you thought could be something very different right now. So have that in mind. Always know and define your risk on every trade that you take. It is very important these days with how volatile the market is, because we could move, the market could get angry fast, and angry fast could be either direction. So you have to be prepared, or you have to understand your risk, and you have to protect your capital. With that, as always, wishing you a successful trading day. Hope this information helps. Have a great day.